Hello, everyone. Thank you for joining this session. Today, we are going to talk about a very interesting subject that is very close to a lot of our hearts. Uh, yes, we are going to talk about mutual funds, and it is really a very interesting topic that we have for today. Before starting, I would like to quickly talk about the markets as it is really volatile at this point in time. You're seeing a lot of volatility in the markets, and uh, the world is slightly unstable at this point in time. As we all know, we are seeing markets falling and being volatile on a regular basis. You have seen FPIs exiting from India big time over the last almost more than a year now. We have seen a lot of FIA outflows in the markets. If you look at crude, because of the geopolitics, because of the Middle East war, crude has also been volatile. And we have seen the crude jumping from an average of $60-$65 to more than $100, which have affected a lot of economies as such. We even the gold or silver you look at have been fairly volatile, as well as the Nifty and the entire markets have been volatile. We've seen a lot of corrections in the markets of the last few months. See, these kind of phases come in the market. As a matter of fact, we have seen such phases in the dot-com bubble, in the global subprime crisis. We have seen these kind of situation in COVID. So this is an exceptional situation where we have seen geographies and geopolitics getting evolved, and a lot of countries fighting amongst themselves. But if you look at the past, if you look at in Afghanistan versus the US, the war prolonged for a long time. It prolonged for more than 10 years, but the markets did not react. If you look at the Russia-Ukraine war, the Russia-Ukraine war initially started in 2023, and then after that, it's been more than 3 years, and the war is prolonging, and the markets are still. Initially, they reacted, but after that, they stopped reaction. So we have even if you look at COVID, when the first time COVID happened, markets definitely reacted. But as and when things started getting settled, the market started to overcome the fear, and then the facts that actually impacted the markets were something else. So the markets were not reacting to the continuity of the war. Likewise, in this situation where Iran is fighting Israel as well as US, it is a situation which is definitely tense. If you look at, there's a lot of destruction of a lot of capital, as well as a lot of people have died, as well as there are disruptions around the energy ecosystem. But if you look at whenever the escalation of the war starts to drop, you will see that markets will stop reacting to this ecosystem. While the war can continue or might continue for a longer period, you'd see the ecosystem evolving and the markets not reacting that much to the news around this kind of a tussle. Right. So that's what we feel. See, these kinds of events come. These kind of events have an impact on the markets. We've already seen a very deep impact in the markets, where there has been a quite a cut in the valuations, and the markets have fallen. The broader markets have fallen by more than a lot of stocks have fallen by 30 to 50%. Even the broader market, even the indices have fallen. Now it is time when we are seeing, in a way, we reaching near the bottom, and you could see that another thing that I want to talk about is that there is a cost to the war, right? Like if you look at this war, the US is incurring more than $1 billion every day. So it's been almost 25 days to the war, and US has incurred over $25 billion. $1 billion is over 9,400 crore rupees. So if you look at the calculation, the war is very expensive. You cannot prolong the war forever, right? You have to incur a lot of cost to prolong the war, and that cannot happen. Even in Iran, Israel, all these countries are incurring a very huge cost, and that cannot continue in that manner. So we have to look at it from the angle that, hey, there is going to be a light at the end of the tunnel. Although the on ground there could be continuity, but if you look at the escalations, they are going to subside, and then gradually the markets are going to move on from this news to other set of facts that might not as we all know, this is all euphoria that is, and the sentiments that has primarily taken over at this point in time, and the fundamentals have taken a back seat. Now gradually the fundamentals and the valuations will take a front seat going forward. So if you look at the India's growth story, that has not changed, right? You look at the corporate earnings, the India's tops all major economies in corporate earnings growth and CAGR. So if you look at the India's story looks fairly robust, right? The CAGR growth of corporate earnings have been fairly robust, above 12%. If you look at 5-year Nifty performance, that has been leading across the global geographies, and this tells about a story, right? If you look at the FIIs exit, despite the FIIs exit and FII shareholding coming to such lows, the DIIs have been really picking up the shares, and we have seen allocations coming in from a lot of these DIIs and taking the shareholdings from the exits that came from the FIIs. So the markets have been fairly balanced in terms of the capital flows into the markets, right? If you keep aside this current period where there has been sentimental dent, you would see that the DIs have continued to pour in money into the markets. And as in when these things move on, when the FIIs had to come to India markets, because India is presenting that kind of an opportunity versus the rest of the world. And whenever that capital comes in, the markets are going to do very well. Right. So even if you look at our portfolio as green portfolio, it's been more than 8 years since it's been more than 7.5 years since we have launched our overall fund management house, and we've kept our thesis intact. We have kept our thought process around having fundamental checks intact, around having balance sheets, cash flows, business models intact. Even if you look at our current portfolio, we have also done a rejigging on our portfolios. And if you look at our current portfolio, we have um, rebalanced our portfolios to include the companies which are going to run faster as the market starts reversing from here. We have telecom infrastructure, we have microfinance, cables, conductors, specialty, and green chemicals. We are focusing a lot on the domestic aspects of things, as there is good consumption from Indian markets. India is presenting a great opportunity to export. The manufacturing in India is presenting a great opportunity. Even beyond this, we believe that with the FTAs that India has signed and the geopolitical disruptions, India should be a beneficiary in terms of exporting IT as well as defense going forward, along with other manufacturing outputs. So, there is this trap that a lot of investors fall into. So, you should look at this very carefully, because this is something which actually a lot of investors miss, right? When you see a fall in the markets, you do a panic exit, right? If you're selling during downturn, during the drawdowns, that converts your paper losses into actual loss, right? The pain you feel right now is on the paper, while the moment you exit, your investments in panic, you are booking it for permanent, right? You're booking your loss as a permanent loss. But if you go take it on the other side, right? If you wait for the right time, see, the right time never comes. Every dip feels like it could go lower, right? Every rally feels like it's too late. Waiting has a cost and it's enormous, right? So there are traps around the markets where you we get trapped, right? So I think discipline is the key. What history tells us about the market, right? We've seen the history, and history is always tells you about how things have happened in the past, right? There have been events which have had a lot of repercussions on the markets in the past, and events which were again uncertain like this. And in the past, if you look at on average, after a 17-month of Nifty with no returns, the next 12 month average return is over 30%. And if you look at the next 36-month average return, it is over 76%. So we are sitting on a negative markets of 17 months where there's been a negative, in a way, there have been no returns from the Nifty. But if history were to be trusted, you look at the events of 2001, 2007, 8, 11, 2014, 15, 21. Every time the Nifty has fallen, we have seen the next 12 months have been really great. As well as if you look at the next 36 months, they've been really great, right? Like you've seen returns over the next 12 months ranging from say a 1% was an exception, but if you look at it, almost all double-digit returns, and the average returns have been more than 30%. If you look at the next 36 months, they've been again exceptional. In certain cases, the returns have been even 250%. So see, we have seen a good fall in the markets. The fundamentals are mostly intact. Yes, there could be an impact of the crude oil. Yes, there could be an impact of the overall geopolitics in the world. But you look at the India's domestic consumption, you look at the opportunities that are coming in from the manufacturing. These disruption times are the ones where you make most of the money. I think these are times where a lot of investment opportunities are forming up, and they could create a lot of wealth for all of us going forward going into the next 1 to 3 years. So the answer isn't timing. You cannot time the markets. It's very difficult to time the markets. It's the structure. How you are structuring your investments is definitely going to be the answer to your quest for creating wealth. I think a lot of us panic in different times. When the markets are going up, we might book our profits early. When the markets are going down, we might book our losses. But I think it is a lot in the construct in what philosophy are we believing in while investing, and that actually differentiates you in your wealth creation journey. So again, if we talk about the mutual funds, I think this is fairly very close to all of us. A lot of Indians, a lot of us invest in the mutual funds, and uh, if you look at there are first of all there are a lot of mutual funds in the country, right? You've seen more than 50 mutual fund companies offering more than 2000 schemes, and there are different categories of investments. The categories keep on changing. There are regulations coming in from SEBI on an ongoing basis uh, on a lot of aspects of these categories. But if you look at the underperformance, 73% of large cap and 82% of small and mid cap Indian equity funds have underperformed their S&P benchmarks over the last 10 years. And this is mostly actively managed funds, right? They have not been able to beat the index as well, right? So this is really a starking uh, uh, observation that most of the funds are not even able to beat the benchmarks, and we keep on holding to them. And there are scenarios where the schemes are reshaped in a manner where we do not understand that, hey, this scheme has been underperforming in our portfolio. There are certain aspects which are covered and which we are not able to understand. Uh, there are times when we do not have time to actually look in deep dive deeper into these mutual funds to understand whether they are taking us to our goals or not. Uh, so I think another problem that we have seen in this mutual fund allocation of a lot of our portfolios is that we have seen a lot of us holding even 10, 12, 15, 20 mutual fund schemes. See, this actually is over diversification as per us. If you are investing in 20 schemes, every scheme is holding more than 50 scripts, you are over diversifying yourself. You'll not be able to make money because as we all know, as we have seen in this trend as well, that around 80% of the mutual fund schemes are not even able to beat the benchmark. So your probability of making good wealth and consistent wealth from your portfolios reduce as you over diversify, right? And another thing, the gap that we find in this mutual fund ecosystem is that while 63% of Indian households are aware of mutual funds, only 9.5%, which is just the 3.2 crore households, actually invest, despite India being one of the best performing markets in the world. And that awareness is not there, right? So we are trying to bridge that awareness as well, because a lot of us shy away from investing into the mutual funds as we don't know, right? And a lot of us actually do not know how to start, where to invest, which funds to invest, and we are trying to bridge that gap by bringing the small cases of mutual funds, and these are like specially curated by Green Portfolio. All our research, all these years, all our team, we have actually done a very deep dive into the entire ecosystem to curate the roadmap series of baskets of mutual funds. So these baskets invest into mutual fund schemes. There in a basket, on average, there would be 5 to 6 mutual fund schemes, and these schemes are related to the roadmap. Ultimately, your quest to invest into the mutual funds is the roadmap that you're trying to achieve, and that's what we are trying to bridge through these products that we have created. If you look at the roadmap to so there are three types of roadmaps that we have created. First roadmap is the roadmap to 25 lakhs model. The second is the roadmap to 1 crore model, and the third is the roadmap to 5 crore model. Right, there are different types of investors, and these investors have like say, if you are investing, you're beginning your investing journey, you are ranging from 27 to 35 years old, or you have not started your investment journey in the mutual fund space. You want to create your first meaningful milestone as an investment into the markets. As we know, these are fairly liquid investments. You want a very simple process and you want high growth on your investments. This is the right product for you. We have created a right balance of small cap, mid cap, uh, uh, and various other categories of mutual funds into this basket. And if you look at this basket, you can start investing with as low as 25,000 rupees. You can do an SIP of 5,000 rupees. You can even choose plans of 3 months, 6 months, 12 months into this. We are trying to bring you a curated product where our research covering more than 18 parameters uh, keeps on evaluating various mutual funds, more than 2000 mutual fund schemes, and keeps on bringing you the best of category allocation as well as best of mutual fund allocation within those categories, basis the roadmap that you're trying to achieve, right? So if you are an investor who's trying to achieve a 25 lakh rupees roadmap, where you want to create a structured like a portfolio of 25 lakh rupees over the next 5 years, 7 years, this is your product. to invest through this basket. It's a very easy to access basket. You can, on a click of a button, you can do all the allocations. These are direct mutual fund. So this saves you on the cost of regular mutual funds, which is at somewhere around 0.5% kind of a difference every year on the allocation. So we are not only giving you a curated basket, we are also saving you on your cost of investing into the mutual funds by investing into direct mutual fund schemes through this kind of portfolios. The second is the roadmap to 1 crore model. This is again for someone who wants to create wealth, who wants to create a strong posture for in terms of their wealth, who wants a more structured and diversified kind of a portfolio creation for themselves, and who's targeting a 1 crore kind of a wealth creation through mutual funds over the next, say, 5 to 10 years. You can start small. You can start with a 1 lakh rupees in this. You can further invest in SIPs, say a 10,000 rupees SIPs through the product. SIP is very easy. Again, direct mutual fund. Again, this is for your security, for your ambition, for your legacy fund. This kind of a portfolio allocation we have created. You this investment is into large cap, mid cap, small cap, aggressive hybrid. You also have gold allocation and other allocations as well into the portfolio. So again, 5 to 6 mutual fund schemes into the portfolio with the mindset, continuous rebalance, continuous tracking from our end, regular reporting to you. You get to know which mutual funds to invest in. It's a curated basket, gives you ease of mind, targeting your roadmap to creating a 1 crore wealth. So this is again another product which you should actually look at if you're intending to create that roadmap for yourself. So the third product that is in a way a freedom or a fortress fund, where you are wanting to create a significant capital for yourself through your investments into the mutual fund. You want to scale further. You already have certain investments in the mutual fund. You want to consolidate them. You want to scale them further. You want to protect your capital, you want to bring resilience, you want to diversify, you want to do downside management, and over the next 10 years you want to create a 5 crore kind of a fund. So this is the fund for you, where you can start off with a minimum 5 lakh rupees. You can gradually do SIPs of say 1 lakh rupees. You will have a very well diversified kind of there is a flexi value kind of funds are there. You have balanced advantage fund, you have metals, you have other exposures as well into this. Again, 5 to 6 strategies, not over diversification, continuous tracking from our end, and rebalance advices from our end. The target is very clear, to build your roadmap of 5 crores in terms of your wealth creation. So we are moving from a 25 lakhs roadmap to a 1 crore roadmap to a 5 crore roadmap. And all of these roadmaps have different mindsets and different targets. And considering these targets, we have created these mutual fund baskets, and these are fairly trying to solve all your needs. You need not go and keep on tracking whether my mutual funds are performing or not, whether which mutual fund to buy, whether this is a regular mutual fund or a direct mutual fund, where to allocate how much, what time of the market to allocate which kind of category of mutual fund, out of the category which mutual fund scheme to buy. So we are solving it all for you. We are tracking all the parameters on the back for you. There are more than 18 parameters that we are tracking, which includes the traditional parameters as well as the fundamental parameters across the holdings. So we look at the expense ratio, we look at 3 or 5 year rolling returns, we look at Sharpe, Sotino, portfolio turnover, we look at in the equity, we look at debt to equity, ROC, PE, EV to EBITDA, order book, shareholding, revenue growth, PAT growth, and a lot of other aspects. So to cover all the aspects of not only the core mutual fund aspects, but these are also covering the underlying holding aspects of the holding portfolio, underlying aspects of the holding portfolio, companies as well as scripts into the ecosystem. So we are covering the entire spectrum of all categories of mutual funds to bring to you a very curated kind of a portfolio for your allocations. So there is a overload of funds which we talked about. There are a lot of poor performers which quietly disappear, and they are covered, and the past returns look better because they are in a way disappeared from your portfolios. They are not shown there. You look at the rebalancing; they are very complex. You buy, you sell, or in a lot of cases you do a status quo because there is a lot of hassle in terms of rebalancing your mutual fund portfolio. It's our baskets are a smarter shortcut, right? You get pre-curated, goal-based, periodic rebalancing built in. That saves time, that reduces your mistakes, right? So how we have built them, right? So we look at the entire mutual fund ecosystem. We create fund screening basis a lot of factors that we talked about. There is a strategy, there is a track record, there's a manager track record, there's expense ratio, there's churn, there is holding. Looking at the holdings basis various parameters, we look at the performance. We look at sharps, rolling returns, consistency, etc. We look at the ratios, and then we curate these high conviction baskets, right? These are not only including the equity, this also includes debt, this also includes metals, this also whenever we get access, this will also include international exposure wherever we find value. So we are looking at a lot of aspects, curating these baskets for you through our research models. Right. So this is the roadmap to 25 lakhs. As I've talked about, this includes small cap, mid cap, flexi cap, multi assets. Uh, Again, for someone who wants to begin with and create a 25 lakhs kind of a corpus into the mutual fund ecosystem. So people who are starting their career, people who are starting their investing journey with the mutual funds can get into this. Minimum amount is 25,000. Uh, uh, if you look at the roadmap, you look at the direct, as I said, that this invests into the direct mutual fund schemes. If you look at this versus the traditional advisor agent model, where you are investing into the regular mutual fund, there is a minimum extra expense ratio that you bear, which is 0.5%. And if you look at the kind of the fees that we charge on this small case and this curated basket, and you look at the traditional model, you are going to overpay in the traditional model. So we are all not only saving you and helping you create those baskets, we are also saving you on your expense ratio over the period, which will be way higher for you in terms of your allocations. So this is a cost saving mechanism as well for you in terms of, so you're getting a curated advice through a seasoned fund manager who's been there in the markets for around 8 years, been delivering great returns in equity, versus a traditional advisor who's going to eventually charge you through the higher expense ratio and a very higher amount versus the uh, traditional versus the small case basket that we have created. Again, so roadmap to 1 crore has large to mid cap exposure, small cap exposure, aggressive hybrid exposure, gold ETF exposure, multi asset exposure. And this is for someone who are there, who have been there, who have created certain wealth, who've been investing into mutual funds, want to create a substantial wealth of 1 crore rupees through their mutual fund investments. And again, minimum investment of 1 lakhs. Likewise, Likewise, if you look at the 5 crore model again, this invests into the balance advantage, this invests into flexi value, metal funds, debt funds. We keep on evaluating the categories as well, the funds within the categories on a regular basis. The minimum investment amount is 5 lakhs. So if someone who wants to create a legacy fund, fortress fund over the lifetime of say next 5 years, 10 years, you can take this up, and on a regular basis we'll keep on giving you rebalance advice, we'll keep on tracking the funds, and the target will be creating that 5 crore roadmap for you. Right. So, how to get started? You can visit greenportfolio.co, and you can subscribe to the roadmap baskets, just costing you 177 rupees per month. And you can invest into the funds with the amount that you choose. On a click of a button, all the allocations get done. And there's a regular tracking. We monitor, we'll rebalance, we'll send you the updated baskets. On a click of a button, you can rebalance, and it's peace of mind for you, right? We are doing the work for you. This is not only peace of mind, it's also saving you on a lot of cost that you incur while going through an advisor, and while missing out on a lot of things because of you not having time, and or you having a lot of noise in terms of where to allocate, how to allocate, etc. So we are trying to solve it for you. Looking forward to talking to you on this. Our relationship managers are there. You can go to greenportfolio.co. You can talk to our experts. You can also talk to a chatbot, and we are happy to help you on any and every aspect related to your mutual fund investments. We are happy to look at your existing investments as well. Do come and talk to our investment advisors today. I think this is a beautiful product for your wealth creation journey. Looking forward to getting you onboarded with Green Portfolio. Thank you so much for this time, and looking forward.